put this on, get situated.
So thank everyone for coming. I am Vanda Crossley, as you know, your mentor, and I have our guest speaker today, which is Kelton Brunt. He is
Yes,
with Reliable Funding Group, and he's
yes.
going to talk about the fundamentals of financing commercial real estate. So since EXP is now in the commercial real estate space, I thought it would be good to have him come on and kind of tell us the product that he has and how it works in the commercial, because it's totally different from the residential that we're used to. So go ahead, Kelton, introduce yourself. And
Okay, Vanda, thank you once again for allowing me the opportunity to speak. I'm sorry for the background and everything. I'll do better next time. My name is Kelton Brunt. I have been a commercial lender for over 25 years. I started my career with Chase Commercial Lending there for several years, Wells Fargo, and other smaller banks where I managed the credit department. Currently, right now, I am self-employed with my own commercial mortgage company. I decided to take, all the knowledge and experience that I've gotten from big banks and apply it to my own personal business. So with that being said, we're just going to discuss the fundamentals of commercial real estate. And to my understanding, you guys are up and coming, aggressive real estate agents that may be wanting to bridge over to selling commercial properties. And as my discussions have been in the past with other realtors, the first thing that comes out their mouth is, I would love to sell commercial real estate, but I don't quite understand it. And they get intimidated by the numbers and the math and the economics behind it. But they understand that the commissions can be so much greater if they only understood it. So what I want to do this morning is just lay out some basic fundamentals to help you ladies best understand how to approach someone who is looking to purchase commercial real estate. My company specialized, as I was a banker for years, I realized there were so many clients that were not being approved through the banks. Typically between 50 to 60% of all business requests are declined by big banks. People think that you can just go to the bank and get a loan. If you do not know how to structure the deal properly, you have one shot in getting funding from a bank. So after years of noticing so many clients that walk away without the opportunity to get funding, I started a company where we specialize in non-bankable clients. That would be clients who may have some credit issues. That may be clients that can't completely document all their income for whatever reasons. They don't report all of it on their tax returns. That could be clients who are wanting to purchase a specific type of collateral that the bank deems that is not desirable. So what we have done is, through my affiliations nationwide with what we call finance companies, insurance companies, and smaller banks nationwide that are trying to compete with these bigger banks, so they're willing to be a little bit more lenient in their underwriting guidelines. So they have vetted me with my experience and they've said, okay, we want you to find this type of client. So what this platform that Vanda has allowed me to speak to is for me to kind of tell you guys, you too can go out and find these type of clients, and don't be so intimidated by the numbers. I want to buy a $5 million property or $10 million property. It's all the same. It's just zeros behind the number. So let me start out with this. There's usually, I'm going to tell you how I look at it each deal. When a client comes to me, there's just some very fundamental questions you ask. One, what is it that you want? Simple question. I want to buy an apartment complex. Okay. The second question I ask is, where is this property located? They tell me. Then I ask, give me a bridge around what your credit score is. And then the last question I ask is, tell me about your income. What are you doing now? Do you have any experience? And this is what I want you guys to ascertain. If you can get these basic questions down, that is the beginning of understanding whether you have a client that's serious or not, or that could potentially be qualified. The banks consider commercial loans as the four main food groups. There's four main food groups that the banks love to look at. They like to see, which is a multifamily, apartment complexes, retail. Retail is that strip center that you drive by. That's the tenants would be the nail shop, you got the donut shop, the barber shop, and that restaurant. Retail. The third one would be office buildings. Office buildings would be your anywhere from Chase Tire downtown, which is $200-300 million building, to your small 2-story, 8-room where you have, tattoo artists or insurance company. So office, retail, and then industrial. Industrial would be your manufacturing companies that would, utilize it to build something or fabricate something like that. Those are the four main food groups. What that means is that if you have a client that's looking for a property within those four main groups, you've already started in creating a demand that most finance companies will do, because they figure if they liquidate on any one of those type of properties, the demand for them to recover their money is far much greater than someone who wants wants to buy a junkyard or something like that. So that is the first thing you want to identify. One, what is it that you want to buy? I want to buy a multifamily. I want to buy office retail. Two, give me a range of what you think your credit score would be. And I'm going to talk a little bit more about credit score as we go on. He tells you that. Three, what is your job? What is your experience? Well, I've bought 10 homes and now want to go and graduate into a multifamily property. Okay, that is an ideal client. As I mentioned before, my company, we specialize in providing financing for the non-bankable client. I'm first setting the stage what would be a bankable client. Now let's peel that orange back a little bit. A non-bankable client would be, hey, look, I want to buy that multifamily property, but my credit is around 600 to 620. But I got money. I got a down payment. And I forgot to add this, down payment is essential too, because if you got a client that comes and says, hey, look, I want to buy this apartment complex. I saw an infomercial last night at 2:00 in the morning. I think I can do this. Well, do you have any money down? No, I don't. Well, that's most likely the client that you could probably tell him to buy homes or something smaller until he can get his down payment. Down payment on commercial property usually runs anywhere between 20 to 30%, give or take, on the purchase price or appraisal value of that property. So $100,000 commercial property, 20%, you need to have 20 grand. That has always excluded us for buying property because the down payment is so high. There's no such thing like purchasing a house as 100% financing on commercial finance. There's ways that we can do it creatively, but generally speaking, no, there's no 100% financing. So what we have is the four main food groups: multifamily, retail, office, and industrial. The type of client that you want to vet: what's your credit score? What are you going to do with the property? And that will let you know kind of what his experiences is. What is the experience? Do you have a job? Are you making any money? How are you going to help pay this back? And the most important question is, how much money do you have down? Now, down payment can also be in a retirement account. Well, I don't have that much, but I got $100,000 in my 401k. I'm getting to the age of retirement. I want to do something different. That can be a source of down payment where he can draw against his 401k. So with that being said, let's break down what the types of properties are and what banks typically look at once we get past whether the client has down payment for main food groups. So in a multifamily apartment in Houston, man, you cannot go wrong. I had lunch with an attorney, and this is old news. About 3 or 4 years ago, we had lunch. He told me, he said, Kelton, do you know how many people move to Houston every year? I said, I had no idea. He said, on average, 50 to 75,000 people move here every year. What are the major things that people need? Food, water, shelter. So anything dealing with multifamily, if you can get a client and sell one of those, get those financed, that would be extraordinary well for you, because multifamily, the demand in Houston is great. Multifamily has not even really been too much impacted by Corona. Only thing that's been impacted by Corona by the multifamily is that more people coming in and they're constructing more apartment complex. So it's becoming saturated because they understand that the demand is high. But still yet, multifamily is a very good area if you wanted to focus in on that. What clients who want to buy multifamily. Who are your clients? Like I mentioned before, those people who have rental properties, 4 to 5 rental properties that you can talk them into maybe starting out low, maybe a 5 or 6 unit multifamily property. I'm always here to help you, walk you through the economics of it, hold their hand once we get through those basic questions. So that's the kind of clients that we would look for multifamily. Retail, what we mentioned before, same client, but hey, I may have several rental properties. I don't want to go multifamily, but I want to do strip centers, that gets a little bit different because the occupancy and the type of tenants the banks like to see is determined on what's actually there. But yet still, that kind of client would qualify. Now let's go into office building. We have 2 types of loans. Much like residential, we have FHA. We have SBA, which is similar to your FHA, and then we have conventional. Any type of investment property you have is primarily going to be like multifamily, will be conventional loans, because SBA does not lend on investing. SBA lends on clients who want to buy space for their current business and then potentially lease out the remaining portion. SBA has a guideline that as long as you occupy 51% of the space, we can do a loan for you, and you can lease out the other 49. We don't care. You just have to occupy your business. So then the requirements are different. We need actual business financials, 3 years of business financials and tax returns to do those jobs, to do those type of loans. And usually office space and industrial will kind of fit into that SBA and or conventional. You need doctors, attorneys, and stuff like that who want to, or dentists who want to, restaurants want to occupy that space. So as I mentioned before, we have the 4 main food groups. We have the different types of questions we want to vet our clients and see exactly what scale, what pendulum that they would fall in. And then after that, we wanted to decide whether we have to go at conventional SBA. SBA is good in that you can probably come in with 10% down. And the LTV is a lot higher for SBA loans. And the rates are good. SBA has a special program right now, I think till April or May, where they're waiving all of their costs, their closing costs, and they're paying the first 6 months of payments up to $9,000. So for those business owners that you can talk to say, hey, look, what would you consider in buying another building, the building that's bigger than what you currently have for more space, more space to have your inventory, whatever. This is the best time to talk to those type of clients. All you have to do is just set the groundwork. I can take it from there. Sometimes the clients already have a relationship with their bank, and that's fine. But if you have those clients that are borderline, oh, I tried to get a loan through the bank, but they won't apply. Hey, look, let me refer you to a guy that can. So SBA right now is the best possible loan product that we have going on right now. I mean, they're going like hotcakes. So in addition to that, once we determine which collateral type, once we determine the loan that we want to go, either conventional or SBA, and then we start going into more of the documentation. Can they afford this property? Can the income that the property is producing afford make the payment? And then that's out of your hand at that point. That's when we step in and start doing our due diligence on the client. Typically, an appraisal for a commercial is totally much higher than a residential. Appraisals for commercial property can run anywhere from $1,800 to $5,000 or $6,000, depending on the square footage of the property, depending upon the requests that we have. But most likely they're going to run between $2,000 to $3,000. So that's why it's so important that when you vet your clients up front, you want to make sure how much do they have down, okay? Investment properties that are not SBA, you're looking anywhere between 20 to 30% down for the average client. If we have to go hard money, it's going to be a lot more. So our programs go from, I can do prime lending, which was your SBA and your conventional. Then we can do what we call soft lending, where we may qualify the client. He can't report all his income for whatever reason. Then we ask for 12 months bank statements. But as we step down from each program, there is a higher risk to the bank, so it has to correlate to a higher rate. So whether most likely we can get the guy 4 or 5% on a traditional loan, the non-traditional loans may come in around 7 or 8%, and that still may work for the guy, because if you look at how much money he will get by allowing to get this asset, that may be far outweigh the 7 or 8% that he pays. So it's always about doing a comparative analysis or a break-even analysis to see what is best financially fit for the client. And then thirdly is once we analyze the client's credit worthiness, the collateral type, then we order the appraisal. Like I said, the appraisal costs are so much higher because there are 3 components to an appraisal that are not as detailed as a residential. Residential goes by just a sales approach. That's how they determine the value. Commercial not only takes in consideration sales approach, they can take in consideration what we call income approach. How much cash flow is this property throwing out? If we got 100 tenants in an apartment complex and they're all paying $1,000, there's a value to that, because these people are willing to stay in this particular property and pay $1,000 a month versus going somewhere else and paying $500. There's a value associated with the income or the rents. So that takes in consideration. And then the last is what we call the cost approach. If I had to tear this building down and rebuild it, how much would it be? So all 3 approaches, that's why it makes the appraisal a little bit higher than just a residential appraisal. Once again, this is stuff that you don't even have to worry about. My job today is kind of give you the insights, just the whole. We're not going to go into the details, just the whole of how you should approach a client or a potential client or someone that you have in your portfolio that you can say, you know what, Kelton said that I should be looking for clients who have 2 to 3 residential property or some investment property that maybe I can just talk him into increasing investments by going into either multifamily financing or financing retail or office or industrial. I've been working with this guy for years. Sometimes the clients are just afraid and need somebody to help you. That would definitely spread your portfolio out so much higher if you start getting more commercial property underneath your belt. So once you get to that, then obviously the last thing is once the bank reviews the appraisal, same kind of philosophy that the residential goes through, in that the appraisal has to be reviewed, has to be satisfied, the value has to be there, and so on and so on. Then you're ready to close. So what I've done is condensed this whole process. Commercial lending, commercial is usually about a 45-day process because of the time. It's not as quick as a residential loan. So if you can't say, hey, I can get you your money in 10 days, unless we're doing some hard money type stuff. He's going to pay 12% interest rate. He needs cash fast, but typically it's going to 45 to 60-day process. So it is a little bit longer, but that's definitely a tool to add to your tool belt in terms of diversifying your portfolio with not just residential, but residential and commercial, especially when you have a guy like me that I can say, hey, look, I've been doing this for 25 years. I can't guarantee you that every deal will get approved, but when I'm done with it, it's going to be fully exhausted, because what we do is take that one client, much like your residential brokers will do, and we shop this thing from A to Z. And then what we do is at the end of the day, we tell your client, okay, we had 3 bites, and we give the bids to the client. The client says, I don't like these 2, but I like this one in the middle. Okay. Then we go from there. Your clients are not obligated. There's no upfront money to utilize our services. We just ask that they be serious and be cooperative. If we ask for a specific tax return or financial statement, that they give us in a timely fashion. That's the only cost up front that we ask from them, is their cooperation. And once that, we will do our best to shop the deal to from California to New York. Insurance companies have arms that do commercial lending. Hedge fund companies do commercial lending, finance companies. And the reason why they can be more lenient than a bank is because they don't hold deposits, and they're not governed by FDIC like you and I are once we have a deposit. So they said, hey, I could care less about holding deposits. I want to just do nothing but financing. You can't make deposits here. And because of that, I will make your loan where another bank may not want to, because I got to protect Kelton and everybody else's deposits. So I got to be very, very stringent on my guidelines. That's why banks can only approve up to a certain percentage of all the loan applications, because they have the shareholders and the depository holders that they got to think of. These companies are built with multi-millions of dollars backing, and they can be a little bit more creative. And once I found that out, I said, why would I want to stay in a bank and watch so many people get turned down, where I can go out here and help the community, and I can do loans nationwide. For the most part, there's some states I can't in the Western states, but for the most part, I can do nationwide, and we can just help clients. So I'm glad that Vanda and I reconnected, because I would love to continue to do more series about whatever you guys want to talk about, because each thing that I mentioned, we can go into a whole month of discussion, whether it be apartments, whether it be industrials, whether it be SBA. There's so much guidelines, but the more that you are armed as realtors of knowing, hey, just the basics, the better you are of identifying clients that won't waste your time, that can potentially get approved. So my job is to let you guys, arm you with enough information where you can feel confident in going out and talking to some of your investors, or even going out to real estate meetings and talk about, hey, now I can do commercial lending. I can do that now. And even if I don't have all the answers, I know someone that does have more answers than I do. I don't have all the answers, but I have resources where I can go to as well, even because no one knows everything, because it changes so much weekly. Some products I can do this week, some I can't. But whatever we cannot do, I have the resources to find out and get back to you.
I have a question.
Uh-huh.
And maybe I missed this at the beginning. So commercial, I know it's multifamily, but does it start at after 4 units? Because we do
Yes.
1 to 4, that would be
Yes.
residential.
Right.
So 5 and up.
Yes.
Now,
Yes.
if I have a client that wants to be an investor and he wants to do a duplex, can you still help him?
Yes. We
Okay.
do. I can do those programs for people that are in the residential um, arena, as long as it's investment. I used to hold my broker's license where I could do residential loans, but I don't focus that as long as it's non-homestead. If if they're doing a second house or third house, we got some good programs out there for
Well,
them.
this person that I have in mind wants to live in one half and then rent out the other part.
We does he have a home now?
No.
Okay, that would probably be more of a residential. Your mortgage broker would have to do that. I can let me do some research on that just to make sure, because I'm about 75% sure if he doesn't, because we have to be able to. The underwriter will basically say this is a homestead, and for his benefit, Vanda, he would want to go that way with a homestead loan because one, he could probably go FHA and the LTV is a lot lower, down payment, get down payment assistance and all that. But ideally, he's very smart, because a lot of people start out their commercial career like that by just buying a duplex, living it, qualifying for an FHA loan, because commercial loans have a higher LTV, qualifying for an FHA. Then once he gets a loan, then let's talk to him about doing, instead of a duplex, now let's go to fourplex.
Mhm.
And now what I got proof that he's a current homeowner. Now we can look at doing more with him on a commercial side. So that would probably be, I would have to probably defer that to a mortgage guy, which I know you know a lot of them. So
Yeah. Okay. And what about container homes, shipping container homes?
that would be, you remember we talked about the 4 main food groups. That
Yeah.
would be out of that 4 main group, which would be called special use properties. What we also can do, we also can do church financing, special use, gas stations, special use, hotels, special use, container homes. I had a gentleman approach me last year about those container homes. I know they're getting high in demand. Right now, the industry has not fully adapted on them because it's much like a mobile home, which we can do a mobile home park. So it's really, I would have to really look at the client and see if he's financially strong. I may can do something else somewhere else to give him the cash to do what he's trying to do. So basically go around the block to get him to fund in there. But just to say the programs, they have not really adapted that, unless you go a mobile home lender, because essentially those are mobile homes.
Hmm. Okay. I'm gonna have to review this presentation again. I know I am.
So, but yeah, any questions you guys may have, I mean, there's no stupid question. If I don't know it, I can definitely I have the connections and the contacts to go out and find it. But what I want to do is arm you guys with the information that you can actually go out and start marketing people for commercial. I know the commissions will be greater as long as you don't mind waiting. It's a little bit longer than purchasing a home. We also do construction financing, like I said, church financing, gas stations, all that.
Hmm.
Hotels and motels right now, you used to be able to do it right now because of COVID and people are not traveling as much. The banks are pretty much kind of stepping back from hotels unless this guy's extremely strong. He's got like 10 other more, Mr. Hilton or something like that. But I used to be able to do those a lot, but they're not. People are not staying in hotels right now unless it's on like a resort or something like that in Hawaii. Then I can do it. But your normal hotels, I can't do that anymore. I'm having a hard time getting those done. But anything other than that, it's very doable.
Okay. You ladies have any questions?
I did. I wanted to know what is the difference between the process for commercial lending than residential? Like what differences
That's a
are
good
within
question.
the
Very good question. On residential lending, the process is primarily on the credit score. you know, your income, your W-2 income. You know, they do take self-employed borrowers. When we take self-employed borrowers, it's a little bit more in depth because our loan amounts are a lot higher. You know, you can, you know, what I can do loans from 150,000 to 20 million. Most of my loans range around $700,000 or $800,000. So what we do is take the last 3 years business tax returns as well as the personal tax returns. Where you guys look at debt to worth, we look at cash flow. Cash flow is king. Can this client pay this $15 million loan back? And let's stress it in the event that something happens to his current business where he can still pay it. So we do a lot of calculations, a lot of formulas, and we bend that client to where we see where he can break. And if he's breaking at a point where we feel comfortable with this will never happen, then we'll make the loan. Not to go into the detail, there's what we call 5 C's of credit. And 3 of those C's are cash, credit, and collateral. And we want to make sure in a normal situation that those 3 C's, regardless of what happens, he will be able to make that payment. So that's the major process without getting too specific. Then the appraisal has to be scrutinized. And then we have what we call environmental. You got another company to come out and test the soil to make sure there's no contamination. So it's a lot that goes into financing a commercial property. Did that answer your question, or you have something more specific?
No, that answered it. Thank you.
Okay. How about you, Laura? You look like you have a question there. I think she's on mute.
Yeah, I couldn't unmute. I was pressing the wrong button. No, well, it has been very informative. The information about commercial properties, like where do you actually find those customers, those clients?
Oh, okay. I'm getting out of my role of expertise, so I would probably, but I would envision that you would find those type of clients that are in your current portfolio. When you go to your real estate realtor meetings and stuff like that, when you have your networking events, you know, a lot of clients, and I found that to be true because I went to some of them. They're stuck on buying houses. Hey, you know, you have all these infomercials, fix and flip, you know, get rich, all that, and it's only based on residential.
Yeah.
And I am very biased to commercial because I've seen so many millionaires come through my office when I was at the bank and currently now, but when I was at the bank, I mean, and they get it. They say, well, hey, why would I invest in 20 houses and have 20 different locations and 20 different property taxes and 20 different interest rates when I can buy one multifamily and consolidate everything? My economies of scale has just reduced. So therefore I can make a larger profit. I can buy, now this is the honest, the God's truth. If you bought 2 multifamily properties, maybe 50 to 60 units or more, you're on your way, you're real close to being a millionaire, just buying 2. And when you underwrite multifamily properties, more of the underwriting is going toward the property because that's the income that's going to pay the note. What does that mean to you? That means to you is you don't have to have multi-millions of dollars saved long as you have the down payment. You can go and buy a unit. I'm gonna give you a story. I have a friend of mine who's a general contractor, and he's always struggled. His business was good. He got lucky. He was given a job to renovate a 160 unit apartment complex and the guy couldn't pay him. His bill was $1 million. So the guy told me, look, you can have my apartment complex. I'm tired of it. It's a mess. So for $10,000, he got now this is not normal, 165 unit. I just talked to him last week. He's making every month net about $50,000 to $60,000 a month.
Mm.
How many houses would you have to buy to make that kind of money? So if you get that same enthusiasm and passion about commercial as you do the residential, trust me, you won't have a problem finding clients. The issue, and that's why I'm glad Vanda brought me on here, is I want to arm you guys know with the information that you too can go out and find the clients, but you got to have that passion first. When you speak about commercial and they believe you, you will get the clients because everybody wants to make more money. You know, I'm making $1,000 a month on this house. If that tenant in that one house don't pay for 1 month, you went from $1,000 to zero. In an apartment complex, that one tenant don't pay, it doesn't affect your cash flow at all. But you have to be able to convey that to someone who doesn't know or maybe heard of it and say, hey, you know what? I'm afraid that's 500,000, that's 1 million. I'll stick with these $100,000 homes. It's no difference once you get past that point.
Yeah, well, thank you. It's very informative.
Okay.
Yeah, thank you very much.
You're welcome. You're welcome.
So
No,
are
I
there
think that-
some Facebook groups for commercial and
I'm sorry, Vanda, I didn't hear you.
are there some Facebook groups for commercial people where we can go and maybe become a part of that?
Well, I'm not for sure about that, but Vanda, why don't you and I start one
There you go.
along with the rest of the ladies here, and we can start one. And I have a Rolodex of, I got attorneys, then I know you guys got title companies, and I got general contractors. If you guys want to start one, we more welcome to do it. And then, because I'm not concerned about getting the client, so there's no competition with me. My job is to get them financed. But yeah, we can easily start one. So whatever we need, we just do it ourselves.
I like that.
But most of my networking is through bankers, and those are my. I do have some realtors, but most of mine are bankers. They call me and they say, "Hey, look, we know what you can do. I got a client that's turned down. Can you help me? Can you help them?"
Okay.
But I would love to branch out. This is 2021, so if you guys want to do something, I'm more open and willing to do it. We can do. We can talk to your clients. If each one of you guys want to go out and do a Zoom call individually with me and your clients and ask your clients to maybe bring in more clients, I'm all up for it.
Great. Thanks for being a resource to us.
Oh yeah, I don't say that I know everything, but if I don't know it, I know where to get it.
Okay.
Well, thank you very much. I enjoyed every minute of this.
Well, there's so much I didn't tell you. I've only told you 5% because I know we don't.
Every time that we have classes and training and this and that in or outside EXP is about residential real estate. So I'm just upfront, honest. I can respond way more questions about residential than anything that has to do with commercial because it's not thrown out there as much as residential to all of us, you know.
Well, I want to encourage you guys to really consider. I'm not saying that you abandon or abort residential. That's your bread and butter. But now I'm asking you to consider commercial in addition to residential. And you'll be surprised once you get your first deal done. You're like, why did I waste so much time? This is not as complicated as I thought. I do all the heavy lifting on this side. All we need you guys to do is to get like I mentioned before, we want to vet the client, because you'll get a lot of people that will say, hey, you know what, I want to buy a apartment complex. And you start asking, well, do you have any money now? No, but I was thinking that hoping that I can get 100% financing. That's not someone you want to take serious. I would think your clients would be someone who owns 2 or 3 properties currently, residential properties. They're receiving an income. Now they want to step it up. And that's your job, to sell them and educate them on, along with my assistance, on why they want to step it up. Why do I want to continue? Why do you, Mr. Investor, why do you want to continue buying homes? You can still buy homes, but can I show you how I can double your income by just going into commercial? Well, I considered commercial, but I think it's too complicated. I don't know if I can qualify. And do you have any money down? Yeah, I got some money down. That's the client you want to perk up your ears and say, okay, let me get your information and let me give you to one of our referral sources and let him have some further conversation with you. And then I will take it from there. Because there's some creative things that I don't want to confuse you guys that we possibly can do depending on the seller. And then another client would be those clients that are leasing properties. Those clients that are leasing with the option to buy. That is a refinance. That's not a purchase. And in their mind, it's a purchase. They don't have the down payment. If we got the right documents, it's a refinance and they can possibly get money back. So there's so many creative ways, but generally speaking, you want to know how much liquidity they have for down payment, kind of understand who they are, if they got income, if they got any experience. And I think you guys all look very intelligent. I think you probably already know that. I'm not telling you anything that's so over your head. And once you get that information down, then we can at least have a conversation with them. And then you guys can go out and sell properties.
All right. Well, thank you, Kelton. I appreciate all your information, and I'm going to send out to everybody his contact information, so you'll have that and put that in your toolbox. And I'm, like I said, I'm going to send the recording out as well.
And I don't know, with you guys' permission, I would like to have their contact emails, because at sometimes I do have I send out monthly emails. I haven't done it in a few months, but kind of letting know what programs are. So I would like to keep you in front of my mind and keep you guys abreast of what's going on. With your permission, I would like to have you guys' email. So, when I send stuff out, and mostly going to be pertaining to commercial, then you guys can get something, and you never know, you don't never know. Well, hey, I may have a client that fits that, because my programs change constantly.
Yeah, so where do we go for that SBA special? So we can maybe put that out there to people.
I can put something together. SBA, you can go to their website. If you don't understand commercial, it's like watching paint dry. What I'll do is condense it to, a more understandable format, if you will, on the SBA piece. And once again, that changes as well. So, but yeah, I can put that out. If you guys give me your information, give me a few days and I can get some information about SBA.
Need to send him your information?
I'm sorry?
I was asking them if anybody doesn't want me to send them his information.
I'm fine with it. I'm perfectly fine.
Okay.
I'm okay with it.
Okay.
Okay. Well, ladies, I appreciate you guys giving me the opportunity to talk about my business. I apologize about the flowers in the background. So that
That's fine.
so I look at everybody, and you guys are in a more professional environment. And here I'm talking about $20 million loans. I'm in my daughter's bedroom, so I'll do better next time.
Don't worry about it.
Okay.
Thank you.
Well, thank you, ladies. God bless you guys all. I look forward to hearing from you guys. If you have any questions, just shoot me an email. Tell me who you are. Shoot me an email. There's no stupid questions. And I'll do my best to answer.
Well, thank you very much.
Thank you guys. Have a great day.
Too, for
I'm
your
sorry.
Thank you to Vanda too for her time and in putting all this together.
Oh man, I'm forever grateful for this because I like helping people while growing my business at the same time. So thank you, Vanda.
Okay, you're welcome.
Thank you.
I look forward to hearing from you guys. Take care.
Next weekend.
Thank you.
Bye, Amy. Bye, Susan.
Bye.
Bye, Kelton, and bye, Vanda.
Bye-bye.
Bye-bye.
Bye.
Bye.